Hey there, it's Jake, and thanks for taking a minute to watch this quick video. So this is really important for 2020 taxes because with the ERTC, which is the Employee Retention Tax Credit, and the PPP, they're going to affect your taxes in different ways. So if you've got either the ERTC or the PPP or both, you need to watch this video and let me know how it's going to affect your 2020 taxes. So first of all, for the ERTC, you cannot deduct the wages that you paid to take the ERTC. So for example, your wages for the year exceeded $10,000 and so did your spouse, right? So let's say you pay yourself $30,000 and you pay yourself and your spouse $30,000, right? So the ERTC only allows you to do $10,000 as an ERTC wage limit, right? So the wage limit in this case is $20,000, which is $10,000 for two people. So $20,000 in wages is not deductible. So we either need to add this back to income in either 2020 or 2021. So here's where the strategy and here's where this kind of comes into play because is as of a couple of days ago, it's now the 10th, May the 10th that I'm doing this video. Up to a couple of days ago, I was going to say, no, just do it to 2021 because we have no idea if we're going to get the ERTC. However, just a couple of days ago, the IRS started mailing out checks. So because the IRS is now mailing out ERTC checks, now we have the ability to either take it in 2020 or 2021. So what you want to do is decide if your income is going to be higher in 2020 or in 2021, because essentially what this is going to do is this is going to add phantom income, right? So it's income that you didn't really earn, but you have to pay taxes on it. So it's going to add either the phantom income to 2020 or 2021. You get to decide based on which year you think is going to be more profitable for you, right? Because in years that you're more profitable, you have higher taxes and higher tax brackets. So if you haven't got the ERTC yet, I would say you could go to 2021. If you have already received the ERTC check, then you should go back to 2020 and let me know, right? So what do I need to know? Well, I need to know how much you let the IRS know you wanted to get in ERTC or the wages that you said, right? So if your wages were 10,000, your spouse give me the number 20,000. Or you could say, Jake, I got ERTC for $10,000, right? Which is 50%. The ERTC is worth 50%, right? So Jake, I got $50,000. Oh, sorry, $10,000. So either way, I just need to know one or two of those things, right? So here's how the ERTC affects your taxes. So let's go back to this example where we had $20,000, right? So you paid yourself more than $10,000 and your spouse more than $10,000. So there's ERTC wages of $20,000. So the $20,000 wages reduces your ability to take those deductions. And reducing your ability to take a deduction is the exact same thing as adding income. So what happens is this is going to then add to your bracket. So these are the 2020 numbers. These are the 2020 tax brackets. So if you're married filing jointly and you're between these numbers, you're at a 12% bracket. Between these numbers, you're 22%, 24, 32. So what we want to do is we want to say, okay, well, this is going to cost me this much money in taxes, right? So let's say you're making $100,000 and you're somewhere in this range, right? So you have the ability then to say, okay, well, I'm going to have $20,000 more of income on my 2020 tax return. It's going to cost me 22% this year. What is it going to cost me in 2021? And then decide if you want it in 2020 or 2021. So what is it going to cost? Well, it's essentially going to cost $4,400 in taxes because we get $20,000 of what we call phantom income at 22%. That gives us $4,400. Now you might say, well, Jake, I don't want this if I'm going to be paying more tax on it. Yes and no, because the ERTC, like we said, was worth 50%. So if you and your spouse both take 10,000, 20,000 total, 50% of that is $10,000. Your ERTC is $10,000. So you're still coming out ahead by over $5,000 by taking the ERTC. So there is a benefit there, even in the higher brackets, like in the 32%. I have very few clients that make over $400,000, but even in the higher brackets, 30, 32, 35%, you're still coming out a little bit ahead, right? You're still getting some benefit from taking the ERTC. So So yeah, this it's up to you. You're gonna have to decide, 2021 versus 2020. Okay, so basically, this is what you're gonna decide to do, right? So the PPP. Okay, so that's the ERTC. Now let's talk about the PPP. So the PPP is 100% tax free, and you get to take all your deductions that you paid for it on the IRS side or the federal side. California stepped in and said, well, we're not going to be that generous. We're going to allow you to take expenses that you paid with the PPP funds, but only if you have at least 25% reduction of gross receipts in any 2020 calendar quarter compared to the same quarter in 2019. So what does that mean? Well, let's look at these examples, right? So here, right, 2019, we made 40, 30, 50, 60. 2020, we made 40, 30, 50, 60. Exactly the same, right? So if you're exactly the same, there's no reduction. If you made more, there's no reduction, right? So when is it reduced? Well, it's reduced if you had a number that went down, right? So Q1 2019, Q1 2020, this was the beginning of the pandemic, right? So basically starting March, that's where everything was like, hey, you should start staying home, right? Something's bad happening, right? So if you remember that, essentially that's what's happening here. So if your income went down, we're talking not profit, but revenues, right? Revenues, commissions earned, the top line number, that's what we're looking at. So if this number went down between 19 and 20, that is a reduction. That gives you the ability to take the PPP deductions on your tax return, on your 2020 tax return. Now Q2 was right after like everything started shutting down, right? So if everything started shutting down and you decided to hunker down or you shut down your business and you're like, hey, revenues dropped, right? That's essentially what happened now. Of course, not to say that Q3 and Q4 could have impacted as well, but that's what we're looking at here. Is we're looking at 2020 versus 2019. Now, for some reason, if you weren't impacted with 2020 but 2021, right? If last couple months have been really slow for you for some reason, then that would also impact, right? So there's nothing like carved in stone that it has to be 2020. It could be also 2021. So if it looks like you've been impacted or if the last couple months have been really slow for you, let me know that as well. We can take that as a reduction. I don't see California coming out and being aggressively auditing this, right? I think they're basically going to say, hey, yeah, if you were hurt, if your business was hurt and you say it was hurt, we're going to go ahead and allow that, right? I don't see them going through and doing, massive audits on this and people taking the deductions on their PPPs, right? They've got a lot more things to worry about between the unemployment and other people like taking grants and loans and stuff like that when they weren't supposed to. So all right, so I hope that helped, and let me know. Thanks. Bye.